Hello, Dave. Welcome
Hi,
back to
Dale. How are
Face.
you?
Good, buddy. How have you been?
Doing okay.
All right. Do you want to share your screen or you want me to?
Why don't you do it?
Okay. All right. So everything seems to be moving according to the plan that you discussed last time you were on. Maybe a few detours.
Yeah, for sure.
And what are the detours? Like precious metals under pressure. Does that doesn't change anything as far as your,
Yeah,
everything's go
that's
ahead.
pretty much the detour. Everything else seems to be mostly on track. The currencies are taking their time, but yeah, I think it's the precious metals that on Twitter every day I get beat up on
Yeah.
because I remain with my targets of 2,500 for gold
Yeah.
and uh, probably 50 for a silver, 45 to 50. Um,
Okay.
so, so obviously it's going the opposite direction lately, but I don't see anything here to change my mind.
Okay. So Dave, let me ask you, have any of the numbers like the NFP last week, or we're going to have some inflation numbers, move up the timetable for when you think that Powell will act and tighten, taper,
Well,
tighten, whatever he's going to do?
keep in mind my forecast has been all along. I've been ahead of everybody else on the street in terms of saying we could see the Fed tightening by the end of the year, not tapering, tightening. So,
Okay.
so
Big
I'm
difference.
not, that's not anywhere. I don't think there's anybody on the street saying that. So that I've been saying that for months, and I still think that's possible. They may go taper to tightening, but my whole forecast says that the second half of this year we were going to see, after a pause in the summer, we were going to see a reacceleration of the inflation, not only inflation but inflation expectations, and the reacceleration of the economy. And as you know, the narrative right now is that the economy has seen its peak in terms of momentum, and that inflation's still high. There's a lot of talk about stagflation, so called.
Right.
So I don't think that's having you were there too, having been through the period when the term stagflation was invented, which
Yeah.
was the early 1980s. Stagflation was invented because we had a 2-year period where we went into recession, came out of it for 6 months, and went back into it, and basically had no growth from 1980 to 1983, or from late 80 to 83, and we had inflation, move up close to 20%. That's stagflation. What I see people throwing around the term stagflation for today is a period when the economy slows back down to 2 or 3% or 4%, and inflation moves up to 4% or something. So that's not
Right.
stagflation.
Right.
Stagflation is when you have no growth, not lower growth than we expected. And yes, it feels like the reopening kind of stalled this summer, but hey, go through the last 48 years I've been through. Economies ebb and flow through every cycle, and in every cycle, the minute they start ebbing, you have calls for, the economic recovery is over. So all I see this as is more of that, where people react to short-term, periods of ebbing, as
Right.
if that's the beginning of the new trend.
Okay, well, I'm showing the 10-year yield right here, Dave, and this action that we had after, COVID and the big repricing of the 10-year, this action here, a lot of markets made hay with just a, really minor pullback in price. And look how, we corrected more in time than price. We didn't pull all the way back here, anything here. And this looks like it could, last week, could have been an important reversal candle. To me, it looks like rates are headed up to 2%, regardless of what the Fed does. What do
Yeah,
you think?
exactly. My forecast, as you know, I think at 175. I mean, at
Right here?
175. I
Yeah.
called 120 on the 10-year, and
Okay.
and
Close.
I was ridiculed left and right
Right.
for saying there's no way we can get back to 120. Are you crazy? Look at inflation. Look at what the Fed's being forced to do. Are you what are you smoking? And I'd say
Yeah.
no. Everybody's on one side of the boat, and they're going to have to reposition because it's we moved from a 0.6% 10-year to a 175 in a matter of months.
Yeah, they
Uh,
said that this was the most rapid increase in rates. I forgot the terminology they used, but this was historic, the repricing of the rates after COVID.
Yep. And if you
So,
if you look at your chart there, basically it's an inverted head and shoulder. So I
oh,
believe
okay.
we're going to 2.5%. And
Okay.
and I think we'll be there before the end of the year, or close to the end of the year. And
Okay.
I think your statement was correct. They'll get there with or without the Fed's help. Whether the Fed tapers or tightens, we're going to see 2.5%. And I think that is also a big misunderstanding on the street. Is investors think the Fed has to raise rates or the Fed controls rates. You and I know the market
Yeah.
controls rates. So I
The
think
bond
what this
vigilantes have been resurrected. The Fed didn't do this.
no, yeah,
Yeah.
exactly. Yep. And
Okay.
so I think what this is predicting, in my opinion, if I see what I see, it's predicting, if this is an inverted head and shoulder, it's predicting that inflation is going to reaccelerate here, and that as we move through the next 5 months, I think the narrative is going to switch from, gee, inflation's peaked. They're looking at lumber coming down from
Yeah.
1,700 to 500, et cetera. Um, they're going to switch from, hey, I think inflation has peaked, and maybe it was somewhat transitory, um, to, oh my goodness, and more importantly, I think the Fed is going to switch to this. Oh my goodness, inflation is breaking out even higher and accelerating. So I think what we're going to run into come fall is the need to move swiftly through tapering into tightening. Now, whether it happens before the end of the year or whether they tighten in the first quarter, it really doesn't matter to me. I just think the risk is that it happens faster than anybody on the street is expecting. And
Well, we're
so,
only another less than 10% away from your target in S&Ps.
yeah, I did
Your
raise my
primary
target.
target, right?
Yeah, I did raise my target to 5,000 in July.
Oh, okay.
And
Okay. So,
I raised my Nasdaq target to 18,000, my Dow target to 40,000, and
wow.
I still think we could exceed those. I'm pretty comfortable with those targets, but they, as I always say,
Okay.
those are my they're what I expect, but they're also I'm not fearful that we're not going to reach them. So those are, what are we talking? Maybe 15 to
Yeah.
20%, depending on the index from here.
Right.
That'd be a hell of a run if it's there
Yeah.
by October. And that's kind of my time frame, is I think the next 2 to 3 months is where I think we're going to see the highs in the stock market. And then, of course, stock market leads the economy. So, out from there is when I think the economy starts rolling over. Um, and what I see here is everybody's, and particularly technicians, are paying attention to the fact that things have rolled over and have broken some support levels, or broken 50 days or what have you. I see it as all, we've had a rolling correction all year,
Yeah.
and I see this as nothing more than kind of reacting to the narrative. Yes, the opening up economy, the economy opening up stocks, corrected for the last few months. The FANGs and the
Yes.
growth stocks corrected prior to that. I
Right.
think they're both set up for what I think is going to be a rip roaring next 3 months. I still think we end this cycle, what I call a 39-year bull market cycle. We end it in a melt up, meaning we will go parabolic, and depending on the length of your chart, you can see parabolics already, from
Yeah.
the March 2020 level. But I think we even steepen that curve further here, and basically go vertical in the last couple months.
Okay, I know that also part of the scenario is a weaker dollar. That's, a weaker dollar is kind of a tailwind for the market and risk, and commodities and some of the things you're looking for. I know every good technician, forecaster, trader kind of has a line in the sand of where their forecasts might become invalid. Is there anything, any level in the dollar, if it attained on the upside, that would negate your looking for 85 and then 120? I know that's a jiggle you're looking for, is that we peak in here, trade down to 85. That's when gold and silver makes its move and we have a melt up in the market. And then from 85, we have a liquidity crisis and the dollar becomes king again. So
yeah, I don't, being a contrarian, I kind of live in an alternative universe in terms of, I'm not one that gets more, that allows when momentums are going against me, it's not what triggers me. So everybody's saying, well, what level will you turn more bearish on gold, or what level will you turn more bullish on the dollar? That's not how I work, because I'm more paying attention to sentiment and positioning, etc. And to me, the dollar can move up further here, but I think by and large we've corrected the oversold condition that was in the dollar several months ago. And now you've got the street much more attuned to, the people that are on the defensive trying to argue the case are people like me saying the dollar's bearish. A few months ago, everybody was with me. Now they're not.
Right.
Now they're looking at the dollar moving up, and probably more importantly, the euro, or at least more clearly, I'm saying 130 on the euro versus the dollar, and they agreed with that when it was up over 120. Now that it's down to 117 and change, people, and broken below some other levels, people are more skeptical of that. But I think that's what we're looking at still. I haven't changed my tune there, and obviously if I'm right, it's going to certainly help gold and silver.
So Dave, I have a question that I ask myself sometimes. So if I could ask myself, I believe I could ask you. And you talk about, people, right now on Twitter, asking you about silver, like, you have control over the markets. You ever ask yourself, why the heck do we do this, and share our views with the public, when you're right? Sometimes they'll acknowledge it, but they're all over you if you're wrong, and maybe not wrong, but just your timing is off. Do you ever ask yourself, what the hell are you doing?
Not really, because I should, but having been a contrarian for 48 years, I've been here so many times, and what they don't realize is they're my
indicators.
They're my indicators. I mean, somebody yesterday on Twitter, and I'm paraphrasing, I think it wasn't quite this strong, but it was kind of like, when I see a lot of people tweeting David saying he's an idiot, I know we're close on the turn for the precious metals. So it's exactly true, is that people are, as I learned long ago, I'd say probably 30 years ago, I started saying this: the most powerful emotion in the universe is the greed and fear emotion. And people, people get really caught up in momentum. And when the momentum's going one way, they can only see it that way. They can't understand it. And when it's going against them, they get really angry. I mean, it's like, you're supposed to control this. What are you doing? And I can't tell you how many times I say I'm a strategist. All I do is forecast. You have to make your own decisions on investing. I can't advise. And yet, obviously I've had a pretty good track record here in the last couple of years. So people are paying attention to me, but I can't control the market.
So I'm wondering, I don't recall from the last interview, does crypto have a place in your scenario and narrative that you're talking about now?
Not at all. I always say I
You're
don't
like
follow
me.
it. It
You
doesn't mean
can't
I'm
wrap
not
your head
aware of
around it?
it. Pardon me?
Huh?
What did you say?
Yeah. Are you like me? You can't wrap your head around the new asset class. So,
Yeah, to me, it's too new. I don't have enough history. As I say, let me see how it acts in the bust. You know,
okay.
when we go through a bust, let's see what it does, because it hasn't
Okay.
been tested in that kind of way before. And the other thing that bothers me about crypto, as I say, I don't follow it. Doesn't mean I don't have an opinion on it, or it doesn't mean I don't um, see it. But the probably the thing that really keeps me away from it right now is it is to a certain component of the institutional side what mem stocks are to the retail side. It's all
Yeah.
momentum. It's
Yeah.
all these guys think they have the answers, and there's no answers. I mean, it's so new. So I could just easily, and you could too, on a chart, come up with a 15,000 number for Bitcoin as a 60,000 number for Bitcoin, right? I mean, I just can't. And I see technicians, good technicians.
Hmm.
Now, it's one of their lead things now, and I go, good luck.
Yeah.
I think you can chart it certainly,
Yeah.
but
It's
I
very
just,
reactive. They like the
yeah, it is.
volatility. Yeah.
And
Yeah.
from a longer term standpoint, the other thing that concerns me is a lot of those that I say are the so-called institutional side of crypto. They're there because they're in that component of people who are really on the Austrian side. They think that central banks are public enemy
Evil.
number one, and
Yeah.
they hate
Jekyll
government
Island.
control. Yeah,
Yeah.
so it's like they want something that's outside of the central banking system, and they think, and they're also in, some of them anyway, many of them are in that reset category that think in the next couple of years we're gonna
Oh,
cleanse the system and reset with a new currency and all that.
yeah.
And
The Great
as I
Reset.
say, that can happen in the 2030s. That's not happening in this decade, or at least
Oh,
not in the next 5 years.
okay. Because I think there was a story that the IMF made some type of huge, came out with some huge SDR um, package yesterday. And that's what some people are linking to the gold flash crash, silver flash
Yeah,
crash.
yeah. I
It
mean,
may,
the mentality is there to believe that. I
yeah,
don't. I mean, I
okay,
think it will be a long time coming. It's coming. I mean, I'm not. It's not because I think the dollar is, surviving everything forever, but I
yeah,
think in the next 5 years, even if you set up a system, you're not going to do wholesale changes in our system for many years. You might experiment at the edges, but the dollar's still going to be the primary reserve currency at least until mid-decade, I think, and probably
okay.
beyond that.
And Dave, people mainly follow you on Twitter. That's a place they could, grill you when something short term isn't happening,
Sure.
or praise you when you get to your targets. At David H. Contrarian, correct?
No, it's actually at Dave H. Contrarian.
Here it
So,
is, Dave H. Contrarian, right here, people.
yep.
Okay, and
And I
there's
do I
Dave.
do write a quarterly letter by subscription, so
Oh,
people
okay.
can direct message me on Twitter if they want information about that.
Okay, Dave. All right. Well, I appreciate you coming back and updating us with some new targets. And, remember this, the cream always rises to the top.
Yeah, let's hope I'm cream.
Yeah, that's what I mean. Okay. So, and I'm glad you have thick skin.
Yeah, no problem. Yeah,
All right,
it comes
buddy.
with the territory. Hey,
I'm
thanks, Dan.
rooting for you.
Yeah,
Okay.
thanks.
So I appreciate you coming here and sharing your ideas with our community, Dave.
Sure,
Thank you
you're
very
welcome.
much.
Take
All
care.
right, buddy. All right, everyone. That's kind of a wrap here for Turnaround Tuesday. Dave Hunter, you can follow him on Twitter. And he's looking for 5,000 S&Ps. And that's, I think, by this fall or winter before the Fed moves. So we'll see what happens. That'd be one hell of a melt up. And that's a wrap. I hope everyone has a great day. Remember to join the team in 20 minutes. on the morning edge and send me some chicken soup so I could get over whatever I have. Anyway, have a great day trading, everyone, and don't just count your pips, count your blessings. Health is one of them. Take care of yourself out there, and we'll see everyone tomorrow. Adios.